Hey guys, Spartan here with another trade review. Let's take a look, actually a couple trade reviews today. We're going to talk about two little earnings plays today, as well as a options play that I did into today from last day, basically on some momentum overnighting. I had a couple questions on it today, so I figured I would do a video on it. Why not? So, a couple different earnings plays today. OLED, Dropbox, pretty standard. Dropbox, I mean, we were kind of expecting bad earnings anyways, with everything that's going on in China, all the manufacturing being impacted, etc. Probably why it didn't sell off as hard as it was going to, but you know, we could expect that it was going to move a little bit on the downside anyways on the earnings release. So earnings came out, basically shorted the stock at 174, 174.40, 174, added a whole bunch of times, basically gave it another minute. It didn't pop back above the last day's highs or the 182 area, so I stayed in the trade. Added again at 176.60, and then I just let it sell off basically. And as it went into the support areas, I started to cover the position. You can see at 165.59, 166, 167, 166.79. And the one thing is this: because the earnings weren't as bad as, because the price action wasn't as bad as it should have been, I guess, off of the earnings, because it was somewhat expected. I ended up covering the entire position into that 166.79 area, basically was the last cover, and then I started to buy the stock on a bounce. So I added at 164, 164.82, 164.88, 166, and the chart I could see was a little bit extended on the 1 minute as well. I use 1 minute charts for earnings plays. That's the only time I'll use a 1 minute chart. And then as it pushed back up into the resistance point, 167, I sold some more at the 169.11, 169.11 repeating. You can see that a couple different times, a couple different sells there. That was basically most of the position I was out there, and then the last couple sells were at that 168.25 level when it hit the 8 EMA on the 1 minute. I figured, okay, and that resistance on the daily, I figured, okay, it might start to roll over again, and then it eventually did start rolling over again. Oh, sorry, then I had another sell, when it started to bear flag, and then I got out of the last little bit of that long position into that support there, and now it's kind of just grinding out. It is grinding back up to the upside. I think it's worth maybe going after this thing long tomorrow, but you know, we'll see how it acts. So basically, the whole idea was earnings came out, they were negative, took the stock short, added into the position because it didn't start pushing back up, and then as it sold off, their move wasn't as big as I would think a lowering of guidance would be, and a miss. So just started to cover the position entirely, add into it long on a bounce because that price action was telling me that it's probably going to bounce. It did, got out of the rest of it, and then basically held a couple pieces to see if it would go more, and then sold the rest at the end at 167.60. So, you know, more or less 13 points, or actually probably a little bit more. I didn't really count, but let's just call it 13 points on OLED after hours. Not a bad trade. Quick little 10-minute trade basically on that earnings release. The key thing with earnings is always to be staring at Newswire to see when they're releasing the earnings. You can use Twitter and stuff like that. Search the names. There's a lot of different handles that will tweet out the earnings almost instantly, so that's great. You can use that. And then basically just gauging the price action to see what's actually going on. If the earnings are really bad, the stock's not selling off, that's telling you something. If the earnings are really bad and the stock's getting hit hard, that's telling you it's probably going to go more. And then vice versa, earnings are good, stock's not really going up, it was maybe bought into, or people were expecting it, so people are just profit taking on the earnings, or earnings are really good, it continues to push higher, guess what, it's going to squeeze. And I think a good case in point of that was Stamps today. If you guys look at Stamps chart on February 20th, 2020, you'll see what I'm talking about. Anywho, Dropbox, next one that came out with earnings. Basically, earnings were released right away. Instantly started buying the stock at 1885, 1880, and then the stock pushed up towards the 2030. That was my first resistance point that I was looking for, 2030 on the upside, and then it was 2160. If you guys want to see, as I was trading, I was trying to alert this stuff in chat. First target 21 or 2030, and then I was selling to that, and the next target 2160. And this was a pretty straightforward one. Earnings came out, they were positive, sold into the resistance points. I added more at 2073. You can see a crap load of ads here. And the reason why is they announced a $600 million buyback, and I figured that's going to push the stock up higher. I know it's got room to 2160. That's pretty much a point of room to the upside. I'll risk 30 or 40 cents on a pullback to make that point and change to the upside, and basically started to push. And as it did, I was just scaling out of the position. So you can see the sells at 21.40, 21.39. Sold a whole bunch at the 21.75, 21.73, 21.50 area because it was extended on the 1 minute chart. And a lot of the times what I'm doing is I'm looking at these parabolic moves. Just very simple, parabolic trend. Is it likely to come back and test the EMAs after that parabolic trend breaks? Absolutely. And then obviously it did pull back, and that was the end of that. So OLED, Dropbox, pretty straightforward earnings plays. Key is obviously be looking at the Newswire, watching the price action, and then basically react to it, trade to it. Price action tells you the real story. Earnings and news can be misconstrued or misinterpreted. So it's always best to go off the charts because price action or price doesn't lie. Let's take a look at the other name I wanted to talk about, which was Tilray today. And the reason I wanted to talk about Tilray is because I had a whole bunch of questions on it. This was a pretty standard play to the upside. Let's just go to the, well, I guess we can use the daily chart. So Tilray was a options play that we did today. And well, it was actually from yesterday into today. But at the end of the day, what we saw on Tilray was it was pushing up into the 50 EMA. I love the price action closing near the highs at that 50 EMA. Chances are it could gap above that 50 EMA, and it had quite a bit of room higher. The calls were pretty cheap. At the time, they were 21 cents. I figured the price at least had room towards the 1970 level. That level broke. We're going to get into the 2160, 2180, 22 level. That's where all these next resistance points are. Because of that, nice risk reward. Treat that 21 cent contract as a lotto, meaning you risk the entire amount. So whatever you put into that contract, you're going to risk. And it has potential to go, basically 5-fold, 6-fold, 7-fold to the upside. So that's a great risk reward, 7 to 1, if not more. So in this case, the market opened up, we held the position, and then obviously it broke out of the 50 EMA on the daily, and it just started to squeeze to the upside. And you can kind of see the orders here. You should be able to, yeah. So here's my ads yesterday at 21 cents, treating it as a lotto. We swung it into today, and then my big sale was at the 205, where I sold most of the position. I actually ended up selling some contracts against it, the 21s, and turning it into a vertical spread. So, the reason why, and if you guys looked on Twitter, I was up 1900% on the last sale of it. It was because I turned it into a spread, and then I sold the vertical call spread at the end of the day, or not the end of the day, but probably, let's see what time it was, 2:40. So almost at the end of the day. The rest of this 19s for 144, and basically those 21s decayed pretty much all the way back down, which was great because it ended up giving me a little bit more percentage on that. My actual spread was at 1 cent. That's what my average was at 1 cent. So obviously the risk becomes literally zero. 1 cent risk, or that's what you want to call it. But either way, good little play. It was based off of the break on the 50 EMA to the upside on the daily. The contracts had the risk reward setup that I look for on a lotto play, and it worked nicely. So that was the whole idea there. And the whole idea of selling it on that push was similar to what I talked about on OLED and, or not OLED, on Dropbox, where I'm looking at that parabolic trend. I can see it breaking, and I can see sellers coming in on the L2, and I just went, okay, I'm going to start selling majority of the position there, and then we'll just watch to see what happens with the rest of it. Good idea to short those contracts against it, the higher strike, because obviously they reduced the risk to zero, and they gave it all back, which killed the premium on them, and then I ended up getting out the rest of that position later on in the day. So that's that. And those are the three plays I want to talk about today, guys. Tilray, OLED, Dropbox. This Tilray, just on these 19 calls, like I said, they're up. The spread was up 1900%, but if you want to just go off of the calls, they were what? 876%, so that's a pretty decent gain. Even if you don't have the ability to put spreads on, because maybe you're trading on a cash account for the option side. There's definitely nice ways to make good money on these lotto positions if you find the right setup. So this is kind of one of the setups that I look for. Anywho, that's it for today, guys. If you got any questions, feel free to reach out. Spartan at spartantrading.com is my email, or you can just visit us, spartantrading.com. Check us out. Anywho, that's it for today, and I'll talk to you guys next week. See ya.